It is absolutely a huge honor today to be podcast interviewing Doug Fettig, CPA, MBA. I called you, you didn't call me. You're an amazing man. Doug Fettig is a consultant with the Dental Services Group at AKT CPAs, advisors and consultants, ranked as one of the top 100 accounting firms nationwide. With over 25 years of business and consulting experience, Doug has the unique ability to understand dentists' needs and help them grow efficient and profitable practices. His insights allow him to effectively communicate business concepts to dental practices while strategically addressing taxes, investment, and retirement planning needs. Doug has spoken at numerous dental seminars, academies, study groups, and vendor forums around the country, and is known for his energetic, engaging, and entertaining speaking style. As a dental business advisor, he is adept at collaborating with dental practices and incorporating AKT's expertise to help grow their practice and increase their profitability. In addition to his dental speaking roles, Doug has been an adjunct faculty member at Portland State University's College of Business. Doug volunteered with the nonprofit organization Precious Beginnings, serving as president and speaking at numerous medical and charitable events to further the mission of supporting parents with critically ill newborns. Good at you, mate. Hey, my first question to you is, what is the state of the dental industry look like today as opposed to when you first entered it? Or is it better to be a dentist today, or was it better to be a dentist 10, 20, 30 years ago?
Well, Howard, first of all, thank you for all the work you do for the dental community. It's outstanding and it's appreciated. So I want to let you know that. So the state of the dental industry, I think, you know what? It's changed dramatically, but in some ways it's in better shape than it's ever been, which maybe surprise some people. You talk about student debt that kids are leaving dental school with. That being said, the economics still work, and the economics work as well as they ever have for dentists.
Yeah, not many people would say that. One of the things that I love most about you, the fact that you're a CPA and an MBA, if you go find any millionaire and say, how'd you become a millionaire? He'll say, see these reading glasses? I make them for $5 and I sell them for $10 to Walgreens and they sell them for $20. A dentist walks out of the operatory, and I've been in so many offices I couldn't count them, and I say, okay, you just did an MOD composite. What did it cost you, and what revenue did you get, and how much money did you make on it? And I've never met anyone that knows. They'll have a hygienist that'll think, you know what, I think I'm going to add another hygienist. I say, well, your hygienist, Mike, he just did a cleaning exam and bite wings. Did you make $12 after taxes, or did you lose $12? He says, I don't know, but I think I need another one. Why do dentists not know their cost?
Well, first of all, and we talk to dentists at various dental schools around the country, dentists get almost no business training. So they get all the technical training in the world. They come out as incredible technical dentists, but they don't get basic business concepts. And so they don't understand that when they leave dental school, they're going to be the CEO of their practice, the CFO, the VP of HR, the Chief Production Officer, the Head of Marketing, the Director of Procurement. They don't understand all those things. They go, I want to be a dentist. Yeah, but you're an entrepreneur and you're a small business owner. And they never get that training and those skills. I think ideally every dentist would also have an MBA. I mean, in a perfect world, because they're going to be running their own business. And they don't understand, am I pricing my product at a level that I can get the proper return? That's not how they think about their world. They just think in technical terms. So that's the underlying problem of why dentists, the ones who don't maximize their practice, is because they don't understand those basic business concepts.
Like when I got out of school 29 years ago, a root canal was $1,000. You bill it to the insurance and they just paid 80% of your price. Mm-hmm. And then 10, 15 years later, they said, forget indemnity insurance. We're going to go PPO. We're going to send you the price. And it was like $600, $800 to $600. And now some of my friends in Phoenix are like signing up for these HMOs and they'll get like $400. And I say to them, I said, okay, your price used to be $1,000. Did you think that after you did a root canal that you put 6 Benjamins in your pocket? And if you only, I mean, how do you even think you're making money on some of these PPOs?
Exactly. And to take that a step further, you have dentists that are considering investing in new technology in digital dentistry. A lot of their peers have done so, right? And they don't understand the economics that they can provide better dentistry, quicker, faster, and more profitably. So they don't even factor all those things in. They just think, oh, I don't want to spend $100 or $150,000 to invest in 3D dentistry. They don't understand the benefits. They haven't done the cost-benefit analysis and the ROI. So it's amazing. So when we talk to dental students, they graduate nowadays $300,000, $350,000 in debt. Okay, and then if they decide to buy into a practice, that might be another $750,000. And then what happens is their spouse goes, honey, you just went through dental school and you're a dentist, and by George, we should get a house. So, which is fine. A lot of them get too big of a house. And then the spouse says, I think we should have a couple of nice cars, right? And then they have this thing, they're wonderful. I have a couple of them myself. They have these things called kids that are not free. And they find themselves over $1 million in debt and spending every penny that they're making. And that's why dentists think that the economics don't always work, is that they haven't planned this out properly. They go down this path without having a plan on how they're going to get to profitability and how they're going to start saving for retirement.
And the biggest difference I see is all the men marry that pretty little whatever and has that mindset. I just married a rich doctor, big office, and just spends them blind. And the women dentist, 3 out of 10 marry a male dentist. The other 7 out of 10 all marry a dental equivalent. I mean, they're all lawyers, physicians. They all have a professional job. It seems like every woman dentist I know, her husband makes six figures, and probably 70% of the male dentists I know, their wife stays home and spends 6 figures. I mean, I when I'm in dental schools, I tell them the number one only thing you should do before you graduate is marry one of the girls in the class. I mean, that is just the number one goal. Just do whatever it takes, you know.
You know, Howard, speaking of women in dentistry, you want to hear an amazing stat? In 1970, guess what percent of dental school students were female?
In 1970?
In 1970, take a guess.
12%.
1%. 1% were female. Now it's 50% in a lot of dental schools. So there's been a sea change in demographics in the dental field. When you mentioned women, I thought I'd bring out that stat. It's phenomenal.
I look at all the women that were in my class, and I just gnash my teeth. I mean, some of them are already retired millionaires. I mean, we're all 53, class of 87. There's already several of them that are retired millionaires.
So you know what happens to a dentist when they get out of dental school? Here's one thing that happens to them. They get some well-meaning advice from somebody, but it turns out to be the worst financial advice they can ever get. And someone sits down with them. Maybe it's a trusted uncle or their grandfather or even their father, their mom, and they say, you know what? Before you do anything else, pay off every penny of your student debt. Okay, and we're that's the old school, Depression era. Don't never carry debt. So you know what happens? These young dentists take that advice to heart, and they put every extra dollar toward paying off their debt. And then what happens is we talk to them when they're 45 or 50 years old, and they're patting themselves on the back for just becoming debt-free, right? And then we say, oh, that's great. How much have you saved for retirement? And they pause, and they get this kind of question mark above their head, and they go, I haven't started saving for retirement yet. So what happens is, Howard, they've lost 20, 25 years of the power of compound returns because they've focused on paying down their debt exclusively and haven't started paying for retirement. It's a critical mistake.
So what is your advice? First of all, I want to say, what are you seeing in the field? I mean, you're in Oregon, and are most of your clients in Oregon? Most of your dental clients in Oregon?
I'd say about 60% are in the Pacific Northwest and through California. The other 40% are spread throughout the country. When we go and do our talks, we get interest from dentists around the country. So we have clients all over the map.
So let's go through. First of all, let's address, what are you seeing in the field for dentists right now listening to this podcast that own their dental office? What are you seeing out there? What problems are you seeing? What advice are you giving? What are you fixing? What's it from your view?
Well, one of the primary things we're seeing more consolidation than there's been in the past. And by that, I don't mean somebody necessarily selling their practice and joining corporate dentistry, but I mean you're seeing 2 and 3 dentists partner up in order to get some economies of scale, in order to share some of those costs for a new 3D dentistry equipment, back office, accounting, front office. So you're seeing dentists become better business people because in general business, the concept of size and economies of scale drive most decisions in the business world. So dentists are starting to say, wait a minute, if I partner up with somebody else or 3 or 4 other dentists, we can share some of these costs and we can run our practice more efficiently and more profitably. So I think you're going to continue to see a consolidation trend. Yeah, you can still be your own dentist and run and be a lone ranger, but there's benefits to joining forces with some of your peers.
So you see the rise of not only corporate dentistry but group practice.
Exactly. When I say group practice, I just mean someone beyond just the dentist practicing on their own with a hygienist and 3 or 4 ops. They're realizing the benefit of joining forces because it makes a lot of business sense. The problem is that it's like a marriage, and we see dentists who join forces and they're not a culture fit with each other, and that leads to a lot of problems, just like it will in a marriage. So my advice to dentists, my big picture advice is, you're entering into a professional marriage. You have to make sure that you fit and the other dentists involved in that fit each other's culture. Otherwise, you're in for a bumpy ride.
Yeah, and what kind of divorce rate are you seeing among partnerships in dentistry?
Well,
marriage. We just had a marriage counselor on a couple of podcasts before you, and she was saying dentistry, behaves. It was just like a % larger divorce rate than the general public. About half of them are failed in 10 years. What are you kind of divorce rate are you seeing with partnerships?
Well, first of all, just on a personal note, by dumb luck, I've been married 25 years, so I credit my wife for that, not for me. So I have no human insights, but I will tell you that what we see from an associate standpoint, when a partner brings on an associate with the goal of eventually making them a partner, that associate washes out about 75% of the time. It's unbelievable. People think it's easy to bring on an associate and expand your practice and bring on a partner. It's really difficult to make that work, for all kinds of reasons.
Okay, well, let's go. So I hire you. You're going to be my associate, and eventually you're going to buy in. And you're saying 3 out of 4 times it'll never happen.
Mm-hmm.
And why will it? And why? What are those 3 out of 4 reasons why it'll never happen?
One of the primary reasons is that you, as the associate, and myself as the partner, we don't have a tightly worded agreement. I'll give you a couple of examples. I was doing a talk down in Nashville. And after the talk, one of the dentists came up and we were chatting. When he got out of dental school, he joined his father's practice, right? And his dad's like, okay, after a couple of years, I'll make you a partner. Beautiful, no worries, no need to write anything down. Okay, 12 years later, this dentist had to give his dad an ultimatum. Either you make me a partner or I'm leaving and starting my own practice. So people think, oh, it's a family member. There's no need for written agreements. I would argue that if it's a family member, that's when you absolutely need written agreements because you don't want to ruin your Thanksgivings and Christmases for the rest of your life. Here's another example. We had a dentist out in the gorge in between Oregon and Washington. Have you ever been out there? It's gorgeous. The Columbia River Gorge, fantastic. So she joined a practice, kind of a struggling partner, and the partner once again said, hey, after a couple of years, I'll make you a partner. So she worked her butt off and was there for 5 years before the partner, she could finally pin her down and have a conversation about becoming a partner. And at that point, she had rebuilt the practice for those 5 years. And the partner wanted her now to buy in at that new value of the practice that she had created. So she was costing herself money by building up the practice. And that's all because she did not have an agreement in place when she started. So it's absolutely vital that you have a written agreement in place that crosses the T's and dots the I's. I can't stress that highly enough.
So if you're a young dentist, most podcasters are under 30. I mean, that's pretty much what it is. So these young dentists are commuting to work right now, and they're thinking about, wanting to get an associate job or to buy in. What would you recommend they do?
Well, so here's what I want dentists to be aware of, young dentists. First of all, there's more options than you probably realize. So there are some basic options that dentists are aware of. One is corporate dentistry, and that's fine. You go in and you join a big group, and all you have to do is be a dentist. They take care of everything else, and you get a salary. That's fine. A lot of dentists do that for a few years and then realize that the reason why they went to dental school is they wanted to be an entrepreneur. The other option out of the gate is to become an associate. So you join a practice, correct? And hopefully you have an agreement that allows you to build toward becoming a partner. A third option is for the very ambitious, is to go out there and buy a practice right out of the gate or start their own practice. And it's doable, but it's a bigger risk with bigger reward. There's actually a fourth option that's actually growing in popularity, and a lot of dental school students don't know it exists, and it's mobile dentistry. There are mobile dental clinics around the country, most of them serving underserved areas, where you can buy in for about $400,000 and get a beautiful, fully loaded Winnebago set up as a mobile dental clinic. And in that dental clinic, we have a mobile dentist in Missouri. She's bringing in $1.5 million a year, providing mobile dentistry to underserved areas. It's unbelievable. So that's a fourth option that is not even on most young dentists' radar screens.
Will you fix me and her up for a podcast?
Absolutely. It's fascinating. It's growing by leaps and bounds, because what happens is you take your mobile dental clinic and you take it out to Timbuktu and you practice in, let's say, a 50-mile radius. You're serving customers who are sometimes 50 or 100 miles from the nearest dentist. And to top it off, here's the icing on the cake. If you're in an underserved area, you get a break on your student loans. The government gives you a break for practicing in those areas. So it becomes a massive win-win, and the economics, and we've run some scenarios, the economics are very favorable for mobile dentistry.
But you named the four, but you forgot the main one, the fifth one, which was my idea, would just marry a woman dentist in your class. You can stay home and golf all day. You don't have to do anything.
See, I forgot that part.
You just stay home and say, "Oh, today I'm going to get a mani-pedi," and then go golf.
You know what my father-in-law said to my wife, and she married me anyway? He goes, don't forget, you can marry into more money in 5 minutes than you can make in your whole lifetime. Yeah.
Well, tell your wife that I told her that if she would have killed you on the first date, she'd be getting out of jail today. All she'd serve is 25 years. So this was her get out of jail day, and she's still married.
Exactly.
Where are you spending most of your time? I mean, and first of all, how do people contact you if they have questions about all this stuff?
They can contact us at AKT Dental. They can contact me at dfettig at aktcpa.com. So D, F as in Frank, ETTIG at aktcpa.com.
And what's AKT stand for?
That's the original founders of the firm. So
okay, AKT, and your website's AKT Advisors.
Correct, aktadvisors.com, and they can go to our dental tab. We do work in other industries, but dental is one of our primary niches.
Right.
So then I'll get back to them in short order. So what we're seeing, and one of the areas that dentists don't understand they can make changes in, is almost every dentist in the world or in this country, they have a bookkeeper, and maybe it's Helen. Helen's been there 20 years, and Helen does some other things in the front office, but also is their bookkeeper on QuickBooks, where there's these new cloud-based accounting tools where your accountant can connect with you through the cloud, connect with your bank statement, and they can really do your accounting without you ever inputting anything into a QuickBooks program. And not only that, then as a dentist, you can get real-time financial information on your mobile phone. You pull up a dashboard. What are my sales month to date? What are my expenses? Where are expenses outside of my benchmark? So where do I have some warning signs that my expenses are exceeding the norm? So there's incredible tools in the technology side of accounting that are impacting dentistry, just like the dental world is being impacted by digital dentistry. Technology is coming at them from the financial direction as well.
And this is your own software?
No, this is a software that we partner with, but we provide the expertise to run the software. And basically, it's cheaper and more efficient for a dentist to use this cloud-based software than to have Helen use QuickBooks in their office, and you get more real-time information and more powerful information.
And what's the name of this software?
The software we use is a software called Xero.
Okay, Xero, that's right.
It's with an X instead of a Z, so it's Xero Xero. A powerful tool.
And how long have you guys been using this now?
We've been partnering with them for over a year, and we're converting all of our clients. We have about 250 current dental clients across the country. We're converting all of them to Xero and bringing all of our new clients onto this tool, and it's phenomenal. It's a game changer.
And how much a month is something like this?
So what we charge for Xero, when it's a new client, we charge them a setup fee to take their financial statements and transfer them. We charge them a $2,500 setup fee, and then it's $500 a month going forward. So when you compare that to the
That's how
cost,
much a month?
$500 a month
Okay.
for full real-time financial statements, advice, and that type of thing. So compare that to, using QuickBooks and having someone on your team take time to work in QuickBooks. Once they're up and running, it's a no-brainer financially.
Okay, I think my only claim to fame in life is I've had more beers at more bars with more dentists than anyone I know. I lectured at Albuquerque last week, and after the lecture, we went in the bar till 3 o'clock in the morning, and I know how my homies think. First thing they're going to think is, if you're in my accounting, you're going to embezzle from me. And then I reply back to him, how do you know Helen's not embezzling from you? And then like an ostrich, they freeze and they stick their head in their sand. So they're worried that Helen is already embezzling from her, and now they're worried that here's some fancy guy with a CPA and MBA who will do it. So that's what they're thinking.
Well,
What would you say to that guy? And he's had 4 beers and a shot of Patron.
Well, at least he's drinking something good. But anyway, I'm glad you brought up fraud and embezzlement. So when I do my talks, I give a little side talk on fraud. So you may have heard this old joke. Two out of every 4 dentists have experienced fraud. The other 2 just don't know it. Okay? It's absolutely true, Howard. These are small businesses. They don't have a lot of internal controls, right? So what happens is, in most of these small dental offices, Helen, bless her heart, has worked for me for 20 years, and I trust her like a family member. So Helen takes care of the accounting. And sometimes I don't have to worry about anybody else even looking at the accounting because Helen's got it locked and loaded. So when Helen goes on vacation for a week, I just let it sit and let Helen take care of it when she gets back. Well, you know what happens? When we hear this, it's like a confessional. When we start talking about fraud, dentists start talking about their past experiences. Helen was embezzling from them for the last 10 or 15 years. And Helen maybe embezzled $50,000 or $100,000 from them, and they never knew it because they trusted Helen, and they didn't have any internal controls. And I'll give you some examples, and then I'll talk about how cloud-based improves that, cloud-based accounting. But so here's what some dentists do. I talk to dentists and I say, do you guys ever pre-sign checks before you go on vacation? And I talked to a dentist in Alaska. She's like, oh, absolutely. When I go on an extended vacation, I want the office to run smoothly, so I pre-sign checks for my office manager to use to pay bills. Okay? I said, all right, here's what one office manager did to their dentist when they got these pre-signed checks. So you take the original check, you make a copy of it. On the copy, the office manager wrote ABC janitorial for July cleaning or whatever it was. Then on that copy, she made another copy of that and put it in the file. So in the file, you have a copy of a copy. It looks like the original check made out to ABC janitorial for July's cleaning for $1,000, whatever it is. So when ABC janitorial calls up in 2 months and they go, hey, you guys never paid me for the July cleaning. Someone else goes in the file and says, well, yeah, there's a copy of the check right here. Meanwhile, Helen has the original check signed by the dentist that she's never written on. Well, in this case, Helen had a gambling problem. Helen makes the check out to herself, deposits it for cash, and uses it for her gambling addiction. Now, eventually what happened was they figured out that ABC janitorial never got paid and the house of cards collapses eventually, right? But by the time that happened, Helen had embezzled $25,000 through the use of these pre-signed checks. And oh, by the way, do you think that Helen invested some of that money in the S&P 500 that they could get back from her? No, that money was long gone. She had a gambling addiction. So the worst thing you can do as a dentist is have a trusted bookkeeper and have nobody else have oversight into the accounting records, provide them with pre-signed checks. Here's another example. There's dentists, and I say, do you review your bank statements? And they go, no, that comes to the office manager. I let them take care of it. I said, no, those bank statements need to come directly to your house, not to your office. You need to be the one who opens them. You need to do a review of them. You need to look for unusual items, large items, and when something comes up, even if you think you know everything, ask a couple of questions to your office manager every month. Gee, I don't remember this item for $1,200. What was that for again? Can you show me the supporting documentation? Okay? And obviously, they should be able to pull the supporting documentation on why that check was written for $1,200. If they can't, then you have the start of a problem. And by asking those questions, 1 or 2 a month, they know that you have oversight into their behavior and into the finances. And that's really all you have to do is spend a little bit of time to get your team to know that you're a part of that process. It's when you abdicate your responsibility that's when embezzlement happens.
Okay,
So,
would you say that the basic internal controls is the CEO owner of the practice signs the checks, the
yep.
canceled checks are mailed to the home, not the office,
Hmm.
but probably most importantly is that who's ever doing collecting the insurance check, making the deposits, blah blah, all that stuff. There's got to be at least two people in on this. So, um, Do you really lower your odds if it's going to take two people to steal? Because now in game theory, I got to come up to you and say, "Hey, Doug, hey, let me just run something by you.
Yep.
You want to start stealing from our boss?" And then because I'm risking that you just sit there dumbfounded, a deer looking in the headlights, and then go tell my boss. So is that basically the main thing that it's going to take two people to steal? Then as your practice gets bigger and bigger and bigger, it's going to take three people to be in on it, and bigger and bigger, it'll be four people. Is that the biggest internal control?
Yep, and that's in accounting parlance, that's called segregation of duties. So the biggest thing you can do is have cross training and have more than one person involved whenever there's cash or there's financial entries being made. And sometimes that can just be somebody else taking over the accounting duties, 1 week a month, not having the same person do it constantly. So the minute you bring another person into play, you're right. You widen that world, and then two people have to keep a secret, right? And it becomes exponentially harder for that to happen. So all you need is some basic controls. I talked to some dentists from North Carolina Dental School, and the dental students were like, I don't want to spend 10 hours a week worrying about internal controls. I said, you don't have to spend 10 hours a week. You just have to have some cross training. You have to have some basic oversight. You have to know they have to know that you're looking over their shoulder in a positive way. And here's what one of the dental students said. They said, I don't know if I'd be comfortable telling my team that we need internal controls because they're going to think I don't trust them. And I said, here's what you say to your dentist. Here's what you say to your team. You say, we're going to put in these basic controls and we're going to put them in for your protection. It's for the protection of the entire team. So we're all working on the same page. So we're not putting anybody at risk. So we're doing this for you. And that's how you present it to your team. You don't say, I'm putting this control in place because I don't trust you. You don't go down that path. You say, I'm putting this in place to protect you, not because I don't trust you. So you see the difference?
We're both an MBA. My school, ASU, we weren't. By the way, which Oregon are you? Are you a duck or a? There's only two types of Oregon people: a duck and what's the other one?
A beaver.
A duck
But
and a beaver.
yeah,
So we never cleared that up. Are you actually a duck or a beaver?
well, I'm actually neither one, but I have an allegiance to the Ducks because my older son graduated from there last year. My younger son's about to go there, so I'm financially tied to the University of Oregon. So I'm a Duck.
I have to tell you, of all 50 states, that might be the biggest rivalry of any state I've ever seen. I mean that. But I'm a Sun Devil. They taught us in MBA school. They call it the Mack trucks, and that the way you have this unapproachable, uncomfortable conversation is you just always tell all your employees the business comes before an individual, and we have to be prepared as if you were ran over by a Mack truck. So
Yeah.
if I got a call at 8 o'clock this morning and you were on your way to work and ran over and killed by a Mack truck, who can I put in here right now that knows your whole job?
Yeah.
And I've always done that. I've made receptionists go assist. I've made assistants become receptionists. I've mixed through the accounting, the people, several people who do that job. But I think that's because that is one of the major causes of bankruptcy in the United States is the one person dies. I mean, I used to see case studies where it'd be a small business does 2 million a year, 25 employees, everything was great, but their sales was just this one guy, and he sold all 2 million. He drops dead of a heart attack. They hire a guy who's amazing, but he could only sell 1.5 million a year, and thus they didn't cash flow. And all these case analyses are saying if your business can't survive any one person being ran over a Mack truck, you really don't have a business.
You're absolutely right. And in fact, that's a great way to approach it to Helen and say, Helen, we need to have another person involved. You might fall ill. You might get hit by a truck. We have to have cross training so everybody can do everybody else's job. Now, you mentioned like a catastrophic illness or something. Another thing I can't stress enough to young dentists is you have to have disability insurance. You must get disability insurance. I talked to a dentist. It was a really sad story. He was out working in his backyard. He was working on a fence or something, smashed his hand with a hammer. And for 6 months, he couldn't practice dentistry. His hand was injured that bad. Now, fortunately, they were able to do surgery, and he was able to eventually practice again.
Now,
He
do you
did have
need disability insurance if you're already married to a disability?
That's kind of a catch-22. I'll get back to you on that one. But dentists who, a lot of people, I'm old. I know I'm not immoral anymore. You're still young, Howard. But these young people, they think they're immoral. Why do I need disability insurance? Well, if you get sick and you can't practice, there goes your income, right? If you get injured, if you break your arm, even you have disability insurance. So I can't stress highly enough that, especially when they're young, it's inexpensive. You must get disability insurance.
Okay, so Dentaltown is now on an app, and it's got 50,000 downloads. So of the 217,000 dentists on Dentaltown, 50,000 of them are on the app. And if I go to the app category and I go to practice management or I go to finance right now and I'm just scrolling down, half the questions in your department are, my labor's out of control. My labor costs are high. And they're always asking, okay, so this guy just posted 1 minute ago. He said, they say labor should be 25%, and that includes everything, uniforms, health insurance, blah, 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 blah. But that's different if I'm in a PPO practice versus you're in a cosmetic practice. So I just want you to rant on all your thoughts on labor, since that seems to be what people are worried about the most.
Well, so first of all,
do you see that in the field from your 250 offices? Is this a concern among your 250 clients spread out across the United States?
Absolutely, and the reason why labor is a concern is it's usually their biggest ticket item in their expense list, of course, labor. And here's the difficult part about labor. It's not a one size fits all. So depending on what part of the country you live in, depending on the type of benefit package that you offer, depending on whether you have an associate or not and how you're compensating them, depending on the bonus structure you have in place for your hygienist, those are all going to impact that labor percentage. So is there a range? Yes. We don't think your labor line item should be above 30%. And that can include different factors. If it is, something to look at. Now, if you say my labor is 22%, I might say, really? Do you have the benefits included in that? Is that fully loaded? So I think there's a lot of different factors that come into play, and dentists, not being sometimes the best business people, don't understand those different factors that impact that percentage.
So 30 is the max, and what should the ideal be?
I'd say the ideal that we see, about 28%.
28%.
Because think about it. If your labor costs are dramatically below the average, is that sustainable? Are you maybe you're undercompensating your people? Maybe that's a short-term strategy that's going to destroy your practice in the long term, right? You want to have your people compensated so they feel like they're a valuable part of the team, so you're not having constant turnover. So I would argue that you can shoot yourself in the foot if your labor costs are too low. So there's a range in there that we're comfortable with. It's generally that 26, 27, 28%.
I want to go to an MBA question. When we're in MBA school, the Fortune 500 is just filled with mergers and acquisitions. I mean, even this week, Microsoft bought LinkedIn. I mean, Yahoo, blah, 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 blah. And I see mergers and acquisitions in dentistry is just almost never used. Like when I'll meet a dentist in a town of 4 dentists, and old man McGregor is finally going to sell, and the smart one goes and buys his practice, moves into him because he's eliminated a competitor. There were 4 dentists, now there's 3, and all those new patients, and et cetera, as opposed to let him sell it. Some young bucking bronco moves in and is ready, has 10 times more energy than you do. Do you think mergers and acquisitions, buying the old retiring dentists across the street's practice and merging in mine, do you think it's underutilized, fair market, overutilized? I mean, because it seems like whenever I meet some guy who's doing $3-4 million a year, he's bought 2 practices in his career of retiring dentists. What do you think about that?
Well, I think it's an excellent business strategy, but it has limitations. And I think the reason why you've seen less consolidation to date in the dental field than you have in general healthcare is because it's a relationship business. And so you have the Leave It to Beaver situation where the kid goes to the same dentist as the parents, and they've known Dennis McGregor for whatever years. And so you have that element, that's that corner grocery store element that's still fairly prevalent in dentistry. So I think that for a dentist to come in and buy a new practice, it's not as simple as buying a hardware store or something else. It's very relationship dependent. So the smart ones that buy a practice to expand understand that relationship component and try to reconnect and rebuild that component with the practice they just bought. So those new patients don't feel like they're now part of this corporate dentistry practice. They want that personal touch, that personal feel. So I think that's the mistake that some dentists make when they go down the expansion path. They look at the numbers, and the numbers might work, but you got to realize some people maybe were coming to that practice outside of a geographic area because their parents grew up with that dentist. And once you buy that practice, they're like, well, old man McGregor's gone. I'm not gonna drive that far anymore. So you're gonna have a natural attrition when that dentist retires. It's just human nature, and you have to factor those things in. And it's just not just an ROI calculation.
So let's go back to cost, because I think costs are on everyone's mind. Because like I say, I can't believe that 29 years ago I got more money for a root canal than I do today. I mean, 29 years ago it was $1,000 and Delta paid 80%. Now these PPOs send them. You sign up for 82% of dentists signed up for them. A root canal is $600 to $800. A lot of them are complaining about costs. We just saw Patterson Dental Company lay off several hundred of their reps. A lot of dentists are always wondering, am I paying too much for my supplies? Should I be jumping around between Patterson, Benco, Burkhart, shopping online? My labor is too high. And a lot of this squeeze is because their prices come down with all these PPOs. So talk about overhead and what are you seeing in the field? What is it a big problem? Is it not that big a problem? What are you seeing in the field?
First, let me touch on your example of the price of a crown. I guess I would say to you, I wonder how much you paid 25 years ago for a color television set versus how much you're paying today and what the quality of that is. So part of that is the impact of technology and efficiency. So I'm not shocked that the price of a crown is relatively the same as it used to be because other factors come into play. Does that make sense?
Yeah. I mean, a DVD, my first one was $800, and now you can get a better one for $50. Is that what you're saying? Is that the point you're making? That over time, everything gets faster, better?
Absolutely. Think about, in our day, we're going to see self-driving cars. Okay, they already have the technology, right? The first self-driving car is going to cost God knows what. Once they start mass producing them, the cost comes down. So to compare procedure costs, there's other factors that come into play versus strictly time. So you have to factor in those other things. Around overhead specifically, it's really important that dentists understand. A lot of dentists don't even understand their budget and what their benchmarking costs should be. Well, what should I be paying? What's a reasonable amount to be paying for rent as an overhead, as a part of my budget? What's a reasonable amount to spend for dental supplies? What's a reasonable amount to spend for lab? They haven't budgeted for that. So there's the old phrase in business, we manage what we measure. If as a dentist, as an entrepreneur, as a CEO, if you're not measuring those things, how can you possibly manage them? And once you start to manage them, sure. So the pressure on the Pattersons of the world, the Burkharts, the Shines, all those people is pricing pressure. Because if I can go online and I can order the exact same product or what I think is the same product for a lower price, I'm going to do that. Especially young dentists, right? They live in the Amazon Prime world. Order it, it's there in 2 days. That's the world they grow up in. So you have to give them, as a rep, you have to give them a compelling reason of why it makes sense to order this product from me. If it's even slightly more expensive, they have to understand that there's value either in that relationship or in the quality of that product.
Another big emotional question they're always asking is to own their land and building or not. They're a lot of, okay, so here's the scenario I see all the time in downtown. She's got a practice. It's in San Antonio. She's running 2,500 square foot in a nice shopping center. She's crushing it.
Yep.
But in the back of her mind, it's always torturing her saying, you're throwing away $2,500 of rent every month. You should buy land and building. This is America. Is that a territorial instinct or is that a good business decision? I mean, what would you say to someone who everything's fine, she's crushing it, but it just kills her that she's renting?
Well, I would say that there are some there are some long-term benefits to buying that maybe they haven't factored in. So first of all, right now, what are mortgage interest rates? I don't know, they're 3.5, 3.75%. So right now, it's just like it's a great time to buy a house. It would be a great time to build out a practice because of interest rates. And once you do that, I'm glad you brought this up, because there's a term that's used, it's called cost segregation. So if you go out and build a new dental build out, a lot of dentists, their accountant is not savvy enough, and they depreciate that entire build out over 39 and a half years, because that's what you depreciate land and buildings at. When in reality, you can take all of the components needed to provide dentistry, the plumbing, the HVAC, the air conditioning system, the special equipment, that's all considered part of dentistry, and you can depreciate that over 5 years. So there are some massive cash flow benefits when you do a new build out, if you have a cost segregation done and move those costs up to a 5-year depreciation schedule. Beyond that, the benefit of owning is that for a lot of dentists, when they retire, they continue to own that property to the person they sold it to, so they have residual rents coming in as a retirement buffer, as a cash flow buffer that they have in retirement, because they still own that property. So there's some long-term things to think about as well. Now, if someone's killing it, okay, maybe they don't need to build maybe they can build a new site and still keep the one they have and expand and not put all their eggs in one basket. So there's a lot of different ways to look at it. But the money is out there from lenders. I talked to one lender. I said, what % of your dentists ever go bad, ever default on a loan? He goes, about 1%. And those are the ones that probably have addiction problems or something. Dentists are considered an unbelievably good credit risk by lenders. I mean, you have cash flow, you have a built-in demand. It's all there.
And you're right. When you talk to people who just do dental practice transition deals, they all say that they're the envy of their whole banking system, because they have the lowest default rate across all the verticals in their whole sector. They're at top 1%, and they always do say the failures have more to do with personal issues. They got addicted. They got and 85% of the time that's alcohol. 15% of the time it's pills and other stuff. And also back to embezzlement. It seems like a lot of the embezzlement stories I see, the embezzler had some dysfunction with the doctor. They were either addicting, they were either sharing prescriptions for Vicodin, or they were having sex. And not only sex, a lot of them are ex-wives, where the ex-wife, she was done, she was paying all the bills, and I know 2 cases alone where she was moving $5,000 to $6,000 a month to Sydney, Australia, and just stayed with them for 2 or 3 years. And then when he finally found out, she had all that stuff. So yeah. So do you see that, where the person embezzling has some weird relationship with the doctor?
Yeah, oftentimes there's a relationship, and maybe it's a romantic relationship, or maybe if it's your spouse who was your office manager and you get a divorce, then it's probably wise to divorce them from your business as well, because depending on the nature of the divorce, or even if you think it's been a amicable divorce, it's probably a good idea to make that break from the business side of the practice as well, because I mean, I don't know, it just seems like a awkward dynamic at a minimum.
Yeah. So okay. So let's we're already my gosh, this time is going way too fast. I'm already 3/4 through the show. It's only 45 minutes. I'm going to take off your forget everything we just said. Put on your father hat. Your daughter just graduated last month from dental school, and she says, "Dad, what should I do? What mistakes do kids? This is just August 3rd. They just walked out of school just a month ago. What advice would you give your daughter? She's coming out of school. What are the do's and don'ts? I don't want to learn everything the hard way. You already stuck your tongue in a light socket. Talk to me."
One thing I would say is one of the mistakes a young dentist makes is, I think they wait too long to start their own practice or to become a partner. And every year you wait, you're losing that earning power of being your own boss and being an entrepreneur. So I would encourage her to have an aggressive schedule to either become a partner or to open her own practice. That's number one. Number two, I touched on this earlier, is there's an old saying, the first day, when's the first day you should start saving for retirement? The first day you have a paycheck. So I'll give you an example. My older son, who just graduated from U of O, he got a job in sales, base commission, just starting out, right? His base salary was 30 grand a year. Okay. I encouraged him to put 10% into his 401k. So let's do the easy math, $3,000 a year. Because he started doing that at the age of 22, if he never gets a raise, which means he's the worst salesman in the world, and keeps putting in 3 grand a year, by the time he retires, that 401k will be worth over $1 million because of the power of time value of money. So I'm telling I just told my son directly, or telling my daughter, whoever it is, you must start saving the minute you get a paycheck. It doesn't have to be a lot, but you must start saving something. If you do that, you're on your way to becoming a millionaire. The other thing I tell them is, don't forget that you have a lot more options than you realize. I would explain to her, you have the option of joining corporate dentistry, becoming an associate with a written path to partnership. Look at mobile dentistry. There's all kinds of different ways to slice and dice the start of a career. But my main advice would be, have a goal to have that path be to take you to a partner as quickly as possible. Because that's why most of these kids went to dental school. They want to be their own boss. They want to run their own business.
Now, can you help them on that transition associate contract advice?
Absolutely. We work with dentists all the time that are either making that transition from the associate side, or they're an existing partner bringing in an associate. We work with them on the written agreements, what should be included, what to make sure they have, how that process should. We work with them on income distribution, which can be a highly sensitive area. How much should you make as an associate versus how much you're producing? How much should a partner give up when they're bringing in a new associate? When is the right time as a partner? Some partners think, I'm billing $750,000, I can bring in an associate. No, they can't. They can't support one yet. So that existing practice has to have enough revenue to support and grow that new associate, and we help them with all those different areas.
But you said earlier in your program, the thing I see the most common, the dental office is doing $750, hires this young working hard lady. She builds it up to 1.5, and then when she goes to buy in, the practice is worth 1.5. So you're basically going to go in there, make the cake, and then buy it from the dentist.
That's what we see, unfortunately, because there wasn't an agreement in place on, as the value of that practice increases, what does that do to the buy-in price? We need to give that associate some incentive to build up the value of that practice and not have to pay for all that on the back end. So there's ways to do that, correct? I mean, there's formulas you can do.
And what percent of when you're in dental schools, what percent of the graduates do you think have the mindset of, I'm a millennial, I just want to be an associate my whole life, versus I'm an entrepreneur, I want to own my own business? What are you seeing when you're out there? What percent?
I saw some surveys recently. Fully 75% of young dentists, their goal is to become an entrepreneur and have their own practice. Now, they may not start that way. They may see corporate dentistry as a opening vehicle for their career, but fully 75% of them want to run their own practice. They want to be a small business owner. So there's a strong vein of entrepreneurship in young dental students.
Are some of these corporate chains better to work for than others?
Well, yes. I'm not going to name names, but they all have the same concept, and it's not.
Oh, come on, name names. This is Dentistry Uncensored. We can cuss, tell dirty jokes. This is HBO.
It's not that some are better or worse than others. They all have the same principal concepts. You're going to come in and you're going to learn the ropes, and you're going to practice a lot of dentistry, and we're going to compensate you as an employee. And for some of them, they even have potential, I would say, employee ownership options where they can, buy into the corporation, so to speak, and maybe get a piece of the ownership, versus some where you're simply an employee. And what happens to a lot of young dentists, I'm not putting corporate dentistry down, but they do that for a few years, and then they realize, I didn't go to dental school just to be an employee. I want to have more control over my career. That being said, is it absolutely the right path for some people, and there's nothing wrong with dentists starting out on that path. I just think that a lot of dentists realize that, my gosh, I could have been building my own practice the whole time I've been working for somebody else.
If you're a corporate CEO listening to this, which I know you are, because I get a lot of times they'll send me a quote of something I said. You know what? Just go to Dental Town. There's 4 million posts. I mean, there's changed my life. It seems like the biggest advantage of going into corporate from the dentist I see is they say, okay, I just graduated 4 years of school, $350,000 in debt, and I only did these requirements. I did 50 fillings, 15 canals of endo, 5 dentures, and now they're doing all their requirements every month. So when you're a fireman, you just want to, a fireman actually like fires. You don't like it when your house is on fire, but a fireman gets excited and he's in a red truck on the way to a fire. And so doing that volume dentistry is amazing. Where most of the kids are really upset is when someone non-dental starts driving clinical, like, oh, well, if they have a 6mm pocket, you got to put a minocycline stick in there, and they're reading the literature and they don't buy it, they don't believe it. So if I own a corporate dentistry, I would never let someone who's not a dentist make any dental treatment decisions, because nothing will zap the morale out of a dentist faster when they're sitting there doing something they don't believe in their heart. But I want to ask you another, true or false? A lot of the dentists and dental schools say that when they go to work at corporate, the contract is non-negotiable. They're a big chain. They got 50 offices, 300, 1,500. They give you a contract, sign right here or get the hell out of here. True or false?
False. Everything's negotiable. I mean, I really believe that.
Do you negotiate that? I mean, can they call you for that? Or is that not your expertise? Or what would you do?
Well, we certainly give them some advice, but I think that like any business, it's like when you're hard on by anybody, there is always room for negotiation. Now, there might be certain non-negotiable items within that contract, but to say that's non-negotiable, I think that's too broad brush of a statement. And I think people need to have someone else take a look at that language and maybe provide them with some advice, which is something we can help them with.
The research is pretty clear. 82 out of 100 dentists take PPOs. How many do you ever see this in the field? A doctor's taking 12 PPOs. He's creating a filling for 150. When he sells it for 160, he makes $10. When he signs a PPO and sells it for 140, he loses $10. Have you ever seen where a doctor's taking 12 PPOs and you drop 4 of them that are running at a loss, and at the end of the year, his total collected revenue and production has gone down, but his net income has gone up?
You hit the nail on the head. I think a lot of dentists don't understand that if you're losing $10 on a procedure, it doesn't do you any good to do 100 more of that procedure, right?
Right.
So a lot of dentists don't understand, and PPOs are a way of life for most dentists. That's a fact. That being said, there still can be some fee negotiation within that PPO, and a lot of dentists don't have a fee analysis done on a regular basis. And even a fee analysis can let you know, sometimes we have information on fee analysis where we know the maximum amount that a PPO will let you charge for a procedure. Some dentists submit a lower amount than the maximum because they don't know it. A fee analysis can help you determine what is the maximum amount you can charge for a fee, and are there certain procedures you shouldn't be doing? If you're not going to make money on a procedure, why do it? I mean, it's basic business.
Oh, most of my oral surgeon friends quit doing orthodontic surgery because they kept lowering the fee, and they just said to me, they said, look, this is the hardest procedure I do. This is a procedure I don't even sleep the night before, and now you want me to do it at a loss? Are you kidding me? And a lot of them are glad. They're like, I'm so glad they keep lowering the fee and I quit doing them because they're so hard and I'm not doing it for a loss. But dentists just routinely do things at a loss and have no idea they're doing it. How could, so this fee analysis, is that something you do?
Absolutely. We do a detailed fee analysis by zip code. So if you're in whatever zip code you're in, we're going to do a fee analysis by procedure for you and your peers in that zip code. So you're going to know if what you're charging for an adult pro fee, are you at 50% of your peers? Are you at 70%? And for dentists who have not done a fee analysis in 2 or 3 years, I guarantee you they're probably leaving money on the table. So let's say you want to get up to a 70 percentile of your peers. Just for a routine adult pro fee, if you're charging an extra $10 versus what you were, that adds up to tens of thousands of dollars over the year of your practice. So a best practice dentist should do a fee analysis once a year. Why wouldn't you? Why wouldn't you want to know what you should be charging for that incredible world-class dental care that you're providing?
And what do you charge for a fee analysis?
So for a fee analysis, the first time we do one, it's about $1,500 to do a fee analysis, and the payback is instantaneous. And then for an ongoing basis, the price drops to about $1,000 to do repeat fee analysis work.
And how often should someone get a repeat?
Every year.
And so it's $1,500 the first time and $1,000 for the repeat?
Yep.
And what percent of the time do dentists give you $1,500 and they get their $1,500 back from increased fee revenue?
They make that $1,500 back in a heartbeat. 100% of the time. I guarantee you, unless they just did a fee analysis, I guarantee you they have fees within their practice. They have procedures within their practice that they're below, sometimes below the 50th percentile. And I tell dentists, why do you want to Walmart yourself? You went to dental school. You're providing world-class dental care, hopefully digital dentistry now. There's no reason for you not to charge the market rate for your fees. And the way you explain it to your patients, you tell them, we're bringing in world-class technology. We're providing you with world-class dental care. I'm proud of my work, and I'm proud of the fees that I charge. I think they're appropriate. And that's how you explain it.
But how do you do a fee analysis when they're taking 12 different insurance plans and every one of them's paying them a different fee?
Well, you're still doing a fee analysis based on what your peers are charging. Now, that might be impacted by the PPO rate. Absolutely. But still, there's going to be some procedures that fall outside of that. And you're going to have some non-PPO patients. Most practices have some non-PPO patients.
Yeah. So, okay, I want to switch subjects completely. I only got you for 4 minutes, but have you ever seen the show Last Week Tonight with John Oliver on HBO on Sunday nights late? Have you heard of that show?
I have not seen it. I've seen John Oliver, but I've not seen that show.
Well, anyway, it's a new genre of news that I think what was his name? John Stewart pioneered, I think they're actually crediting Bill Maher as a humorous type of news, because people watch when we grew up on these boring guys that just monotone, and they thought, okay, we're going to tell you the news, but it's going to be funny. But anyway, he did an entire episode just beating the crap out of all these 401k plans for all these hidden fees. And so he had someone come in and he got bids for his own staff at the deal. And it was amazing how the hidden fees alone at the end of, for 25 employees for his company, that at the end of 20 years, I mean, they lost millions of dollars from hidden fees. And he was talking about how the industry is unregulated, and that it's a joke. And then, so have you been seeing, and then it's been making, there's been a lot of stories on it in the newspapers, the New York Times. What do you think about the average dental office 401k?
I'm glad you asked that. We actually, within AKT, we have a wealth management team that manages $1 billion in assets. And one of the things we focus on is fees. And people don't realize the impact that fees have over the course of the lifetime of that retirement plan. I'll give you an example. So if you took $200,000 and you invested it for 25 years, and let's say your total return was 6%, okay? That's going to grow to about $800,000.
Say the number again.
So that $200,000 invested for 25 years is going to grow to $800,000.
Okay.
At 6%. At 6%. If you only get a total return of 5% because you paid an extra percent in fees, that grows to $650,000. That 1% in fees costs you $150,000. It's amazing.
And what is the average hidden fees that you find in a dentist client when you review their 401k?
Well, let me put it this way: if you're paying in fees over 1%, you're probably paying too much. You should be paying 1% or less in fees for that 401k plan.
Now, are your guys fiduciaries?
Yep. We have AKT Wealth Advisors is a SEC company. They're fiduciaries. We have tax planners as part of that team. So they'll do full cycle lifetime tax planning and retirement planning for a dentist. And so they're looking for the entire lifetime of tax mitigation versus just 1 or 2 years down the road.
So it seems like a lot of these stories keep saying the same thing, that if the person managing your 401k is not a fiduciary, then they basically don't have to expose or be transparent with a lot of this stuff. Or can you explain the fiduciary role, and do you think that's a critical part in who's managing your 401k?
Well, it is a critical part. Your 401k provider should certainly be a fiduciary, but what most people don't realize is if you're the owner of the practice, by virtue of being the owner and providing that plan to your employees, you're also a fiduciary. So if something blows up with that plan, you can be personally liable. And so we do a whole separate seminar to explain to dentists what it means to be a fiduciary. Even if you have a 401k provider, you as the dental provider of that plan are still personally liable if something goes haywire. So there's certain things you want to do around communicating to your employees, providing them education, making sure fees are reasonable, so you're not subject to a potential lawsuit from one of your employees.
And what if one of my homies is wondering what his fees are on his 401k and he couldn't tell you anything about it? How much does it cost for you to review his 401k to see what the fee structure is like and if this is a good thing or not?
We'll do a free cursory review of the 401k plan they have and come back with some suggestions, because we realize for most plans we can come up with some pretty valuable ideas, and then if that relationship evolves, that's great. But we'll take a cursory look at their plan and give them some initial ideas right out of the gate.
So what would they need? Do they email this? Do they mail a hard copy? What's the best thing? What's the easiest way to get this done?
It's usually via email is the easiest way, because then when we can transfer information and communicate that way and look at details, then we follow up with a phone call, obviously. But usually to have the information in electronic form makes it the easiest for us to review.
And how many pages of that booklet? I mean, just the whole damn thing, or?
No, it can be at least a lot of times with the summary of the plan. That'll give us enough information to understand. We see plans all the time, so once we know who the administrators for the plan and who they're working with, we have a pretty good idea of what's involved in the plan.
Okay, well, man, that was the fastest hour I've ever done. Doug, thanks for serving 250 dentists across the United States, and thanks for all you do for dentistry. I've heard a lot of great things about you. I hope your zero thing, XERO. I think that's amazing. I'm still shocked at how many. This Steve Jobs iPhone's been out since 2008, and people just don't utilize it. I mean, look at dental insurance. They still come in with a piece of paper cutting down from a tree, and then I have to pay a human being to call over some telegraph line to talk to someone else and say, hey, is Doug Fettig really covered on your plan? Why isn't it on the damn iPhone? Why don't they come in and pull up their Blue Cross and Blue Shield app, bar scan it and say, oh, you're Doug Fettig. Here's your address. Here's all your information. I mean, so I hope your zero really takes off, because
let's think about someday doing a special segment just on zero, and we can show them the power of the screenshots and how they can access information with their mobile device. It's phenomenal.
Well, another thing you could do is we put up 350 or 400 online CE courses on our Dentaltown app, and they've been viewed 600,000 times. Millennials, old dogs like us, would go to conventions and sit in seats and chairs and listen to humans talk. These millennials, they're so lazy they won't get out of bed. They're just laying in their lazy boy, and they say they love it. In fact, this one girl sent me a picture where they actually have hats where you drop your iPhone into the hat, and it looks like you're watching a big screen TV. And so, yeah, do an online course, and you'll hit more people digitally online than you ever will in a convention.
And just to clarify, they're not lazy; they're efficient. Okay.
They're not lazy or efficient. I love calling them lazy because that just really gripes it. They're just smarter. I mean, the bottom line with millennials is, after World War II, the average American woman was having 5.5 kids, and she started having them at 17. The millennials started having them at 27.
Yep.
A quarter of them say they'll never, ever have a kid. And if they do have a family, they're only going to have one or two. I want to make one ending note on millennials is, as far as, I know they're scared about opening a practice. I want to say one thing, being a grandpa now. I got a granddaughter who's 4 years old. There's no good time to have a kid or buy a practice or jump out of an airplane with a parachute. Mm-hmm. Do it while you're young and dumb, because the older you get and the more you wise, you start to understand everything that can go wrong, and then you say, I don't want to have a kid. I don't want to buy a practice. I don't want to. So I always tell people, the best time to buy a practice? 8 seconds after you graduate. You know when the best time to have a kid is? Never. So make 3 tonight, because they're going to be the most expensive, exhausting, hardest thing you've ever done. I love my 4 boys more than I got one of them sitting right next to me. But there's no good time to have a kid. There's no good time to start your own business. Just freaking do it while you're young and dumb and have all that energy before you get too damn smart to see all the risk, and then you freeze from paralysis by intelligent analysis. Yep. Little kids don't analyze all the pros and cons, and that's when you go into. You're not going to drown. You have less than a 1% failure rate, and that's going to be because you're a drunk. So if you don't have a substance abuse problem and you don't have a gambling problem, just go do it. You're either going to sink or swim. Get it out of the way while you have all that energy, and the next thing you know, you're on easy street.
I couldn't agree more. I would tell young dentists, believe in yourself and take risks. You're in a great profession. It's that simple.
Well, and you're great. And thank you so much today for spending an hour with me. I feel bad that I didn't put a tie on for you. I feel underdressed. You have all that hair going and the tie going. I forgot to wear my wig. I didn't put on a tie. But I did brush and floss my teeth today. That's all I can say.
I'll take my tie off next time.
All right, buddy. Thanks for all you do. If you ever want to come back, let me know.
Thanks, Howard.